need or option? Okay, should this even be a question in the first place is one topic to discuss. Now, while we talk about life insurance, if you notice my screen, it just says life insurance with LIFE in capitals, right? What I'm trying to actually talk over you about is actually that we normally talk only about insurance, but we don't talk about the basic concept of life in the first place. What is life insurance? Life insurance is basically something that we require from certain point of time that's used as an insurance for certain requirements, certain needs that come up during certain durations in our lifetime. For example, what's the spelling of life? It's LIFE, right? Okay, if I remove L and if I remove E, what's left with me basically is just if, I and F. In the insurance parlance, I say basically L stands for living too long and E is just early death. So what's if then? If stands for insufficient funds. Now, you must be telling me basically that by living too long, okay, how is that really a risk? Because whenever we go up to our parents, we touch their feet and they bless us saying Ayushman Bhava, right? Okay, so but living too long also can be a risk. I'll come to that a little bit more in detail a little bit later. But when we talk about early death, okay, what do we speak about basically? Okay, if a person dies, right, who all die along with that person? Okay, it's the husband dies, it's the bread earner dies, and also the income dies. So at this point of time, it really becomes important for us to ensure ourselves, then ensure that that we leave something behind as a legacy for our families. And that's basically the basic concept of life insurance. Now, very, very simply, okay, we just have to turn that insufficient funds into an income fund for a family. That's life insurance. But for me, it'll be one simple thing, okay? As an investor, basically as a person who's looking to put my money into life insurance, my basic concept what I'm talking about over here is putting my money into something. Now, there are a lot of options that I have with me. And I can even invest, let's say, why should I even invest in India in the first place? Okay. So today I'm going to talk about 2 or 3 things first before I get into the basic concept of life insurance and the life concepts at all. Okay. So these are the 4 concepts I'm going to speak about. Number 1, basically, I'm going to talk about the India growth story. I'm also going to talk about the declining interest rates. I'm going to be speaking about comparison of investment options that are available with us right now. And finally, I'm going to speak about a few life concepts very, very quickly. Okay. So if I just look at India as a whole, basically India's growth story as a whole. Now, understand this, India's GDP, okay, it's growing by about 6.8% right now. And if I compare it to the rest of the economies in the world, China is at 4.6, Japan is at 0.9, US 2.7, Germany at 0.2. So India is growing. The Make in India initiative, which has been launched, okay, it's actually encouraging domestic and multinational companies to invest, to design, produce products in the country itself. This is also attracting a lot of FDI. The government is also spearheading some initiatives under the Ease of Doing Business initiative. If I remember correctly, we were close to 160 in the Ease of Doing Business a few years back, and currently we are in the ranking of about 63. So people want to invest over here. People are looking to invest over here, and government is also making it kind of easy to invest here. So that also makes sense because people are also then investing. India tops the remittance flows at US dollars 125 billion in 2023 as well. So people are quite buoyant about the India growth story. Does this reflect in the stock markets? Just look at your screen right now. Okay, and you see that in the 10 years, 15 years, and 20 years stock market returns, India stands way above basically even Dow Jones, USA, S&P index, Nikkei Japan, or Hang Seng in Hong Kong, as well as the Singapore stock exchanges as well. So even the growth story corresponds basically with the way the stock markets also are responding as well, right? So in this point of time, okay, if I just put my money into anything in India, it should be growing, right? Okay, this is where a retail investor makes his mistake. A retail investor makes his mistake over here by thinking that he can put his money anywhere into the Indian market and it should be growing. But if I leave my money, basically, if I just leave my money, okay, into the bank and expect it to go, it will not. Because as and when, if this is basically the way the world works, as and when the economy grows, the interest rates keep on falling down. A thumb rule, simple and sweet, a thumb rule that works over here basically is that every 10 years, my interest rates falls by approximately 3%. So if it's 2024 right now, in 2004, okay, 2014, sorry, the interest rate would have been close to about 9%. 10 years prior, it would have been close to about 12%. Okay, all of you all have got your world in your pocket, right? Just open your phones, go into Google and just check. Okay, so you will notice that every 10 years our interest rate falls by about 3%. At this point of time, it becomes prudent to lock in your interest rates through a product that gives you completely guaranteed returns or long-term returns. Fix your interest rate right now. Okay, why? Okay, or basically if I do that, right? If I don't do that, if I go for something else, then what exactly is the downfall which I can face over here? Look at the other options that are available with me right now. Okay, see what kind of, I'm sorry, one second. See what kind of issues that you might be facing in case that you don't invest into a life insurance in the first place, right? So if you understand this right now, okay, then we understand basically what life insurance is all about. Life insurance gives you one option where like if you're investing in life insurance at this moment of time, any kind of requirement that come in later on, okay, that's taken care of because of the backup that you have with you right now. Okay, like it's like when you say you get out in the morning basically and you go out to earn money, right? With life insurance, or if you're taking a plan like this, what you're doing is you're also ensuring that your money also works for you. That's the basic concept of a life insurance in the first place. Second, what we have to also understand basically right now, okay, how many people actually invest into life insurance? Okay, I can see about 75 people who have attended this webinar at this point of time, and I can see a lot more people joining in immediately, right? I can see many more people increasing from time to time. Now, if I just look, right, if I ask all the people who have attended this webinar, right, how many people actually have adequate life insurance cover? Not many people will be able to say that. Do you actually have life insurance in the first place? I don't really know. Okay, number one. Second, but if you have life insurance, do you have it enough? I don't even know. Okay, so one request to all of you would be like, if you have attended this webinar, if you are just going through this right now, would be that you just get in touch with your insurance advisor and check with them exactly how much of life insurance cover that is required for you. It's different for every individual. Okay, don't go by the TV ads that say that you should only have 10 times of life insurance cover. But what you should be doing is getting in touch with your advisor, okay, checking exactly what kind of liabilities you have, when you want to retire in the first place, and once you have set up basically the kind of liabilities and your retirement age, after that you should be deciding exactly what kind of life insurance cover you should be having for you. Okay, it changes according to every single individual. Okay, now initially I spoke about this one concept. Basically I said living too long and early death. Okay, so let me go back to that concept. Now, when I spoke about these two concepts, one of living too long and second of early death, okay, early death, like I said, okay, is a loss of the income earner, loss of the husband, and loss of the income in the first place that goes off. Okay, but when I'm talking about living too long, is that really a risk? Let us see. Okay, I asked this question to so many people and they all come up with me with one answer. Which day basically is the most favorite day of the week? Okay, and people always come back to me saying that it's Sunday. Why? Because they get to shop, they get to dine out, they go for long drives, they meet family and friends. Now, one simple thing, if this days, Sunday is a day in which I can get to do all these things, isn't that the most expensive day as well? It becomes, right? Now, if there are 4 Sundays in a month, it becomes completely manageable for me. But in case I have every single day becomes a Sunday, it becomes really difficult for me to manage. So that is the concept really, okay, of what I'm talking about, the retirement. This is about your golden years. Understand one simple thing now. Towards the left of your screen, you can see the time when you're earning your income. And when you're earning your income, these are the kind of things that you have to spend your money on. You have to spend your money on your child's marriage. You have to spend your money on your leisure, medical expenses, luxury goods, household expenses, your habits, your lifestyle. You are spending your money on all that. Once you're retired, okay, tell me one thing. Would you also spend your money on food, luxury goods over there as well? Or would you want to compromise on your living? So one thing which you have to understand, when you're retired, you got close to about 20 odd years after your retirement to live. Your average life expectancy of an Indian is about 78 to 80 years currently. This is the average life expectancy. That means close to 20 years after your retirement. If you are living 20 years after your retirement, that's 20 years without income. And you still have to meet all these requirements, okay, in your golden years of your life. So this is the concept of living too long. do think about this. Okay, do think whether we need to actually invest for retirement in the first place or not. Currently, if I'm talking about any kind of pension plans are currently taxable. Okay, insurance offers you a solution that's also tax free. Okay, look at the second thing which you're talking about now. Okay, this is about education for your child, right? Now, if you go back home to your family, right? You go back home to your family basically, and once you reach back home, you see your child over there. Okay, what makes you that happy? Is the smile on a child's face, the well-being of your children, that you feel happy because you're supporting your loved ones, all of the above. Okay, everyone has told me that they're very happy when all of this is met. One simple thing, guys, the most beautiful gift that you can ever give to your child, which will remain to him for very long, is the education that you give to him. Okay, education is the most beautiful gift that you can ever give to your child.
So I think there is some technical glitch on the Jaideep's end. In the meantime, by the time he connects, I will try to recap whatever he said. So life insurance, even though it has a word called life and insurance, the most important aspect of this product is that it can give you long-term coverage in terms of your life cover and benefit to your family members. At the same time, it also has a lot of attached benefits like investment, savings, and then planning for your children's education or marriage, which are basically long-term goals. And there was a slide which was shown by Jaideep, which highlighted on the rate of return provided by different financial products. But as we all know, as a human, our tendency or our ability to have long-term investment is really very short, unless and until you are invested in a product like PPF. Yeah, because the moment anything which is liquid, we tend to first reach out to those kind of products, and that is where we also miss on the long-term goals of our family or whatever financial planning we would have done. So life insurance is a product which comes with a lock-in product, which comes with long-term guarantee, and obviously, if you are invested in a better product, something like Sanchay Plus, which guarantees a fixed rate of return at the time of investment, whatever is the prevailing interest rate, for a very long period of time. And when I say long period of time, it can extend up to 25, 30 years of the investment. So I think it is a very unique offering or the proposition which is presented in the form of life insurance product. And to talk about HDFC Life, obviously they are one of the trusted and one of the reputed brands in the country, and their products are very much known in the market. Let us see if Jaideep has his connection back, and we'll wait for some more time. Hold on, guys, please do not disconnect. So Jaideep is still having some technical issues, but in the meantime, I will try to cover some of the important aspects of life insurance as a product. So as you all know, the first thing that we always say that in a category like life insurance, the first product that you should always have is a term product. But as an Indian, we always felt that if we are paying premium to a life insurance company, what if I'm in good health and I survive my some assured age, uh, or the age till, till which I'm taking my insurance. So in that case, there is an option called ROP, which is return on premium, wherein if you survive your gestation period age for which you are insured, you will get all your premium back. So this is a special feature introduced by most of the life insurance company that helps you to get your premium back in case you survive your remaining years of your insured age. As I mentioned, Sanchay Plus is one of the innovative product which was launched by HDFC Life Insurance, and it is known for its long-term return guarantee. And in the falling interest rate scenario, there have been a scenario where the product has assured rate which was as good as 7.5 and close to 7.65, depending on the age or the period for which you are taking the plan. So these are some unique offerings and the product options that are available in a product category like life insurance. Nowadays, there are many options. There are a lot of bundling which is happening. So just to give you a few examples, there is an option wherein you pay premium for 5 years, or you make a single bullet payment, because if you have a good liquidity with you and you have a good cash flow in hand with you, you can go for a single premium payment, so that you don't have to pay premium over next 3, 5, or 10 years, and you with one payment itself you cover yourself for the rest of your life. So these are some easy options that are available with the life insurance company, and we as HDFC Security obviously offer all these products to our clients. My only request is that please give some time to this product, uh, have a fair understanding about it and what it offers. Then connect with your HDFC Securities advisor and try and understand which are the different products available under the uh, categories which can be of help to you. So I see Jaideep is still not able to connect, and I have few questions which are coming on my screen. Uh, yeah, so there is a question saying, is the session on? Yeah, the session is very much on. Jaideep is having some technical issues, because of which we are not able to hear him or see him right now.
So Niraj, I'm active now.
Hello.
You able to hear me now?
Yeah. Go ahead,
Yeah.
Jaideep.
So sorry about that. So sorry about the technical issues that came up. Right. So, and thank you so much for just taking it up and basically just talking about the basic concept of life insurance as well. You spoke about the plans of Sanchay Plus. So thank you so much about that. So I hope you can see my screen right now.
Anyways, yeah, you can go ahead, Jaideep, with your commentary, and I'll take the rest part of your presentation in question answer format.
Absolutely, absolutely. Right. So, like we said, basically about the presentation itself, you said that what is the most beautiful thing that stays with the children, okay, which will remain with them forever, okay, and the answer to that basically very simply is the education that you give them. So one very simple thing, okay, like you said, you spoke about this plan called Sanchay, you spoke about the plan called Click to Achieve, you spoke about the term plan as well. Okay, now these plans really come into the picture in case you have really a goal to aspire to. And the goal which you have to aspire to basically is the goal of education, of retirement, of a special requirement, special education. These are the goals that actually you plan for. All right. People normally look at life insurance and they say basically this is a life insurance from a life insurance company, right? My interest, okay, which it gives me is about, let's say, 5%, 10%, 15%, 20%. Okay, there might be other companies that give me a bit more. But what you have to really understand is what that company, what the product actually will do for you, for your life stage, for your life goal. Okay, so very simply, okay, the life goals that we look forward to are the life goals of education, right? Because on the screen, okay, which I can see right now, okay, it says that which is the most beautiful gift which you can give to a child. That's just basically the education that you can give them. Okay, and the plan that you can do for your education, okay, is a plan basically by the name of Sanchay Plus, which you mentioned. Okay, you also have a plan basically by the name of Click to Achieve, which you can use, right? In which you have your income, which goes to goes to the customer every single year immediately after the payment is done. So I make my payment, and from the next year onwards, I can decide that exactly how much amount of money I can decide that I need to keep in the plan or take out as the fees for my child's education. Okay. Apart from this, one thing which you also need to look at. One second, sorry. Yeah. One thing which you also need to understand basically about the basic concept of life insurance or basic concept of the education planning. Okay. One basically thing is that when we look at education planning, right, two things we have to look at. One is that we can actually ensure that a child goes ahead with this talent that he has with him. Correct? Okay. For example, basically that your child is talented and child will go ahead and he'll do a certain amount of things, but you have to give him the opportunity. The opportunity that you will give basically will be yours. Okay. So give me 1 second. I'm just coming to the slide. Great. Okay. At the age of 5, basically that the child's likes and wishes basically keeps on changing. So at the age of 5, your child maybe he wanted to be a Spider-Man. At the age of 10, okay, he said basically he wants to be something like a cricketer. At the age of 15, he wants to be something like a NASA astronaut maybe. The children will do the best to their abilities, but what you have to do is to support them. Okay. Why? Because one thing, your merit will be inborn, but basically money is something which you have to plan for, and that needs to be arranged with proper planning over the period of years. Okay. This you can do, okay, by also using the inbuilt feature in Click to Achieve, okay, where you can actually accrue your benefits in the plan itself. Now, suppose I put my money into Click to Achieve right now, and once I put my money into Click to Achieve and I pay a premium in the first year, I can accrue the benefits, and I can only take it out, let's say, when my child's certain comment, like the age of 15, he passes this 10th standard, 7th standard, at that time I make money and I can utilize it for my child's fees. So this is something I can do, right? You also spoke about the requirement basically about a daughter's wedding. Now, one thing which you have to realize, your daughter's wedding is a momentous occasion for you. You plan for the best ever education for your daughter. Okay, you plan for the dream event, and of course you want to support your angel even after marriage as well. Correct? Okay, but one thing which you have to understand that we don't have enough time to plan. Our children grow much faster than we think they do. Like we say, matches are made in heaven, but you can make your child's wedding a grand affair. How can you do that really? Okay, you can actually plan for it well in advance. When I'm talking about planning, this is what I say. Okay, we will need to actually think about what we need to order in terms of menu 6 months to 1 year in advance. You need to even think about basically what you need to, where you need to get this wedding done, whether it needs to be a destination wedding or not. That needs to be a close to 1 year or 2 years in advance. Apart from that, we need to even think about the invitation that we need to give. Okay, that needs to go at least 6 months to a year in advance. But the planning for money needs to start at least 10 years or 12 years in advance. So Niraj, while you're talking about the plan itself, while you're talking about Sanchay Plus, while you're talking about Click to Achieve, while you're talking about these solutions for the customer, okay, what people need to really realize is that we are actually not planning for insurance, but we're planning for our life events. And these life events are something that we need to really take care of. Okay, how? By planning for it right now, by investing for it right now, by thinking that, like even if my child wants to become a cricketer or an astronaut, I should have the means to provide him that. And this basically is all about life insurance. Simple. Okay. So coming back to the one thing which you spoke about right at the start. Okay. I even started off by talking about this one thing which said that is life insurance a need or an option? Right. So Niraj, I'll say only one thing. Okay. If my name is not Nair, but it's Ambani, then I don't require life insurance. But basically, if my name doesn't end with BANI, then definitely I do require life insurance. I do require the solutions. Why? Because these are the solutions that will provide me the crutch basically to take care of any kind of eventualities that life comes up with. Okay. Thank you so much, Niraj. So this is basically all about life insurance and the presentation which I wanted to give you.
Thank you, Jaideep. And thank you. Thank you again. I will just, there are few in the chat, I'll put it to you. So, as you mentioned about the marriage, so for something like child marriage, which plan of HDFC Life would you suggest?
Right. So for a solution like a child marriage, now is a child marriage a guaranteed event that's going to happen in the future? Yes, it is, right? It is definitely going to happen in the future. Now, if the child marriage is going to happen in the future, the event is guaranteed, I would suggest a solution also which is completely guaranteed. Now, invest into a plan which is called as a click to achieve. Now, this plan which I'm talking about is a solution that will give me, let's say, I have my child's wedding coming up in the next 10 years, 15 years, 20 years. What I could do is I could take this plan. This plan gives me an option of getting monthly returns as well. Okay, monthly returns coming out of this plan can be even reinvested. And with the reinvestment as well, I can make sure that my child gets the wedding that is required. I even have an option in this plan where I can accrue the benefits, right? So assume that I'm taking this plan, when my child is only about 2 or 3 years of age. My child's wedding will come after 20 years. So if I've accrued all the benefits in this plan from now till then, my plan will also get a savings back interest deposit rate plus 1.5%. Okay, so apart from the interest rate, that is, this plan is actually accruing. Along with that, I'll also get the savings bank account interest rate plus 1.5% as well, which will be added to my plan every single year, every single year. And at the event, of my daughter's wedding, at that point of time, I can just take out this money as a lump sum and use it to give her the destination wedding that she requires.
Okay. Nowadays, people are getting into this habit wherein if you are 40, 45, you don't wish to work till 60. And I'm talking about obviously the salaried class. So, what in case if someone is 40 or 45 and he wishes to retire by 50, 55, but he needs a good retirement corpus? In that scenario, which product will be suitable for him?
Yes, great. We have a variety of pension products as well. Okay, we have plans like SPP, SRP, okay, systematic retirement plan, smart pension plan. These plans are plans basically that either give you a guaranteed solution or they give you a unit link solution as well. Now, what these solutions actually do is they help you create a corpus for your retirement. Okay, a very relevant question. Like I mentioned, basically the expenses that I have with me right now, there was a market study which was done and which said that the expenses that I have with me right now when I'm earning my income, those are the same kinds of expenses that I have. What 70% of my expenses I carry with me at my retirement time also. 70%. Okay, but I carry 0% of my income, correct, when I retire. So basically, one thing which I have to realize is I have to plan for my retirement well in advance. Okay, 40, even 40, basically, I would say is a little bit late to be thinking about retirement, at the age of 50 or 60. I would suggest that once a person starts earning, okay, let's say even if you say 30, that's still fine. But you're cutting it a bit fine, basically, if you're saying, you're going to start investing at the age of 40. So if you invest at the age of 40 also, you could invest into solutions. Like I said, we have a systematic retirement plan, we have a smart pension plan, we have a guaranteed pension plan. Okay, these plans basically what they do is they help you create a corpus for your retirement. Now, once this corpus is created, at the age of 60, once you've decided to retire, then what you can do is you can take about 60% of the money upfront. Okay, this will be tax-free completely. From the rest of the 40%, you get pension. And this pension will continue for the rest of your life. Okay, then the option that you can have to get this pension is you can even get this pension basically for yourself, or you can also get it for yourself and for your family as well. That means for your spouse as well. So the pension starts for you, and after unfortunate demise of the primary insured, after that basically the pension continues for the spouse as well. That will continue. So these are the solutions that we have. Okay.
So I have the last question on the panel, and it says, which is this plan name with HDFC Life that gives option of return on premium with a term plan benefit.
Right. Okay. So I'm sure that all of y'all are even going through the website of HDFC Life. That's the reason why you're asking such pertinent and pointing questions. So the name of the plan that you're looking forward to, in fact, and a plan that will really help you in the future for planning out your term plan requirements is a Click to Protect Super. Okay. So this plan name is Click to Protect Super. Plan is very simple. Okay, where you can have a life cover, right, up to a certain period of time that will help you protect your any kind of liabilities that you have. So that's the first option. You also have an increasing income option. You also have a decreasing income option. You also have a return of premium option. All these options are available with you.
Great, great, Jaideep. I think that was really helpful. Thank you so much for coming for this webinar and giving us insights into a life insurance product. So, as I mentioned, we will keep doing this kind of webinar for all our customers, and we will keep providing you with all the necessary information which will help you make a better decision with your advisors and financial planners. So, thank you for joining today's call. And I would also like to take this opportunity to thank Jaideep and HDFC Life Insurance for partnering with HDFC Securities for such an informative initiative. Thank you once again. And with this, I conclude this call. Thank you. Bye-bye.
Thank you so much. Thanks for having us. Thank you.